Hey, a very good evening to you traders. This is Mark. Welcome to your trading video. Okay, this is a DAX trade I took from, I think, 2 or 3 days ago now. I've just been flicking through my journal, analysing it. I thought this would be a good one to stick in the blog. But do you know, there's a couple of things to point out here. Right, let me just scroll out and then we'll just see where we are in the bigger picture. So 15-minute chart, because it's always good to see, and this will be good when I go back and review my blog exactly where we were. So we've been in this range now. This is the DAX, and we've been in this range for a while. We gapped up, and we've been sitting in the sort of second range up here for a few days after that. Now, this is the day I'm looking at here. We come down. Sorry, it's not the day. It's this day here. We come down, and we'd started to fill this gap. Okay, we'd been up there for a while. We came down and we'd filled this gap. So that kind of gets me interested. I'm trading very, very lightly at the moment. Volatility's low. I like to have volatility expansion environments, but you know, if the volatility's low, then I'll look for my mean reversion trades. That's generally the way I'll approach it. Volatility high, range expansion. Volatility low, mean reversion. I'm not that good at mean reversion. I'm better at reading tape when we've got volume coming through and spotting those really nice exhaustions, you know, the little pauses on flags, that kind of thing. That's really where my specialty lies. But you know, I'll take a few of these now and then with low size just to keep my eye in the game. Obviously, the currencies are the one that's moving at the moment, but you know, I quite enjoy trading the DAX. Anyway, let's get back to the point. We had an opening drive to the downside that put in a low here, and then we started to curl up, roll back over, and we were down here. And this is when I started getting interesting. But first of all, I want to point out the difference between two types of double bottom. If you've got this where you're pulling back and then quickly retesting, I'm not interested in fading that there. I really am not, because the quicker that's coming back to retest, the more aggressive the sellers are, the more heavy this overhang of supply is, the less aggressive the demand is. So I want to at least wait for a flush if I'm looking to fade that move, or a flush spike back, then tries to hold a little bit and then look to sort of quantify my risk with a stop under the low. However, when you get this kind of thing, the roll down, there's your first marker in the sand, pushes back up. Yes, you know, in hindsight, when we look at this, that was probably the better trade to take when it started putting resistance up about 30% of the initial drive. I like to sort of frame it in the quarters or thirds, and when you start getting that and it starts to flag and it starts to do that, then the likelihood is it's going to roll over. And if it doesn't, you can quantify your risk and put a stop very, very tightly. So hindsight, Mr. Hindsight here, that would have been great, but we can't trade on hindsight. I was waiting for the long. I wanted the mean reversion play. Like I say, I'm not too keen on taking range expansion plays in this low volatility, low volume environment. So anyway, we came down and we pushed through the low here, and we started to get a little pickup in volume, just a little bit. But bearing in mind we're at that sort of time zone where it's a little bit quiet, 10 o'clock till sort of 1 o'clock now, it's a bit quiet. And I got a really, really good entry with my buy. 52, which was around about here. I just spotted this little die out, a little flush. And I just thought, you know what? My thesis of this trade is, if we can pull back to the prior day's low, I'll have half the position off. Quick 10-tick scalp, fine, no problem. I will then give myself that room to underneath that. And I will give myself, because I don't really want it going anywhere lower than that. I don't really want it going under that low by that much, because that just changes the nature of the trade. But ultimately, what I'll look to do is I'll look to pull it out, as we come back up. Maybe we can tag this VWAP, because by the time we get here, the VWAP will have pushed lower. The moving average was about at that key level as well. So that's the kind of area, if I'm sort of broad with it, that's the kind of area I'm looking to exit the whole trade. Nothing fancy, not looking for highs or anything like that. Just a mean reversion trade, downside probe, take it, take some off, make for it to sit around. I'm aware that it's low volatility. I'm aware that it's low volume. Okay, so what happened is we kind of drifted around here. And this, I think, was my mistake. In hindsight, and this is the danger I think you have with low volume and low volatility trading. As we push back up, very nice, got it pretty quickly. I got to say, I got a pretty good entry. A few ticks off the low, pushed back up, took it out, got my 10-tick profit. Fine, great, 11 ticks or whatever it was with this sort of finite pricing that the companies do these days. And then we just sort of started to sit here. And you know what? I should really have thought, I think you should take the whole lot off, take your 10 ticks and forget about it, because there's no desire to push it up above here. There's no real volume coming in. Somebody's obviously sitting here on that resistance level, and he's just selling it. He's not aggressive. He's not getting aggressive yet. But the point is, if someone's got, I don't know, 10,000 contracts to do, and obviously it's going to depend on what market you're looking at. In ES, that'll be swallowed up in an instant. In crude oil, it's going to take some time. In DAX, it's going to take some time. But let's say he's selling that, and he's got, I don't know, a couple of thousand left, and he's just sitting there, and he's just selling, putting an algo in that's reloading, or just selling into the market every sort of 10 to 15 ticks push up. And he was the same guy who was selling here, and then he's kind of just nibbled a bit on these pop-ups, and he's sitting here. You know what he's going to do? If he's got a few left to do, what's he going to do? He's going to eventually, when the time goes by and he doesn't get his fill, he's going to start getting a little bit more aggressive. He's not going to slam it into the bid or anything stupid like that and cause a catastrophe or get himself an awful fill, more importantly. He's just going to start, taking a few levels of bid, and then just sitting back and see what happens. Take a few more levels of bid, sit back and see what happens, and then he's going to watch and see if we retrace back up. And when we do, he's going to be there, and he's going to scale a few in, lob a few out, depending on the volume of the day, depending on how much volume's coming through at the time. He's going to want to be a part of that because he's got this order to do, whether it's an order from another client or whether it's for his own book or whatever it may be. Okay, or maybe this is not just one guy, maybe it's a multitude of guys, 10 guys with 1,000 each. You get the idea. But the point is, if there is no demand coming in to outstrip that supply, no matter how small, 10,000 is pretty minimal, then you're not going to get the move. So what am I getting at here? I should have recognised that and cut the whole thing. As it happened, I ended up getting stopped out on the other half. No harm done. It was a scratch trade because I took the first half out, offered a profit, and then ended up losing on the second half. No harm done. But learning from that, where's the place to get long? I know we've got to be careful about looking at hindsight here and careful of overdoing the analysis. But look at this here. The volume just changes. It just changes the whole picture of the market. Volume spikes up. Price starts to push up higher. It's a great place to get involved. There you can say, okay, now we're talking. Now it looks like we've got some volume coming in. The demand is outstripping the supply. It looks like we're going to push the highs. Okay, we ended up pushing right to highs here. There's no way I'd have held on for that. I would have been out at the sort of 11,500 if I was lucky looking for the extension over the VWAP or somewhere around here. But the point is, look how the state of the market changes. Here it's drifting. Low volume, grind. All of a sudden, we had a bit of news coming out, a bit of a speaker, whatever it was, and then it just changed the sentiment. And that point is, you're still stretched, you're still below the VWAP, you're still at the lows. Yes, you're off the lows, but you've changed the dynamic of the trade. You've made it look like a much better trade. And hindsight, that's the place to kind of get involved rather than trying to pick at it here. Or if you do pick at it here, recognize that it's just drifting lower. It's probably not going to push up. It needs some sort of something to overcome it. Wait for it. There it is. There's where the seesaw changes to massive demand coming in. Supply is just dropping off, causing the drive up, and then your exit is where it want to be. So anyway, guys, something to learn from these quiet markets. Different trading these to trading the currencies at the moment, but there's opportunities there. I think you've just got to be careful and pick and choose which ones you take. Take care. Back with another video soon.